Good afternoon, everyone. Good to see all of you over here. Good afternoon. Good afternoon.
Good afternoon, everyone. Good to see all of
Good noon, everyone. Okay, we have a live order flow chart on screen. Yeah, we have a live order flow chart on screen, and I'm looking at that bank nifty, which is near that critical 51740 zone right now. Right, we're doing this live audio session and a video session, of course, to speak a bit more about the order flow. And it's just been that kind of week, where the market has gone one way on Monday, opposite way on Tuesday, Wednesday was another way, Thursday something else, and today we are into Friday. And it's been a news driven week where the market has worked differently, but through it all, the selling which we've seen in October is still there in the market and is continuing even today, right? So we'll just speak a bit more about what is happening out over here. But yeah, all of you who have joined in over here, please feel free to comment in the comments which we have. You can say a bit more about what you do in the derivatives world. What kind of trading do you do, whether you do indices, whether you do stocks, whether you do options, whether you do futures. I'm hearing you, and we'll speak more about what the order flow chart is and what the messaging is all about. But for now, please engage in the comments, and let's connect about what the world of trading means to all of us over here. Right, thank you for all these comments which are coming in. And yeah, so you want the Nifty, I'll put the Nifty up also for you. This is the Nifty chart. In fact, let's do Nifty on the left and the bank Nifty on the right. So we're seeing an IS signal in the Nifty futures, and I'll talk to you about it also. The bank Nifty is at 51,800 as we speak, and the reference line which is holding for me in the bank Nifty especially is this 51,750 740 zone. Earlier in the day, about a couple of hours back, this was the zone which saw a large volume. So when you see this big green bar over here, it will always tell you that there was previously a lot of trading interest out over here at this level. So this becomes a very important line in the sand, so to speak, as we move into the last 1 hour of trade, as we move into the closing of today. So I am focused on what is happening out over here at the 51,740 level, and we will walk you through about what that is happening. So just for context, and I'll just talk to you about what has happened so far, and then we will arrive at what the market wants to do. So this was just around that 11:45 a.m. Earlier in the day, as the market was dipping earlier towards that 51,705, we saw a big cover order come up over here. Now this is a cover order, this 2133 in the bank Nifty, which you see on screen. This was a critical moment in the market. I was expecting, honestly, the market to break down below this and go up to about 51,300, but this was evidence that supply was cutting. Supply was coming off from the market, and from here the market bounced back towards VWAP. It met some responsive selling, and now it has come back back to this level. So it bounced back up, and as you can see up on that higher probe right over here in the bank Nifty, it bounced up right up to about this 52,120 zone, and in this higher probe right here, we saw some supply coming back into the market. Right now, for those of you who have never seen an order flow chart before, it is very simple way to understand it. The left hand side is all the supply, the right hand side is all the demand. Now what do I mean by demand drying up and supply adding? So I look at the top of the bar where price okay has moved to about 50 to 120. And notice okay these zeros over here, right? This is telling me that there is no demand to drive price up even further. So if you were long okay from in the market okay up over here right up to this point, okay, this is a clue okay that this market is not got any more demand and it does not want to go up any further. So this is the demand side, right? Zeros are telling you okay that the long move is done and the market now okay is ready to drop. But what is the confirmation? The confirmation okay comes from the other side. You see this left side which has got supply, okay, you got these 500 lots, 60 lots, 97, 65 against virtually nothing on the demand side. Right now, this tells you okay that there is an imbalance happening, and you should not be surprised at all okay that this market okay went down to VWAP. It got more selling okay at VWAP. There was not much okay demand happening, and it's come back okay to 51,740 okay, which is that zone where the previous demand has come in. Right over here, right? So what I want to see now is because okay this zone has got previous demand, or you can say there was a cut of supply okay at here because of this 2133 green. I want to see okay if the seller okay who is present from the higher level wants to initiate a move lower. So all that okay was done was up to here. It went okay from a zone of no demand and some supply to a zone of previous demand, okay, or where there was no supply previously. Now it's come back okay and tested it with right up to about 51,752. This particular guy was at 51,741. Okay, so for the next 1 hour as the market okay heads up into the close, I just want to be on the lookout for more supply coming in below this 51,740 zone. All right, and if more supply comes in below this 51,740 zone, okay, that is the time okay we would be looking to initiate a new short position into the market. Right, on current evidence which is developing, this particular bar does not have this supply. How do I know? This has got about 631 in the green. So this is a function of all the demand and supply which has come up over here. So I know that this bar does not have that supply to take out this buyer right now. So if I was short, I would be booking okay profits over here. In fact, okay, the entire VMR okay was a short okay from those higher levels, and we were expecting a test of this 51,740 zone. So this particular zone is done now. This particular trade is also done, and we're looking okay to see okay if there is something new okay which develops up over here from these levels. Right. So this is okay basically okay about what is the current action right now. But for you okay to get a good understanding of where we are and what we are doing out over here, you have to apply okay something called context to this market right now. Now what do I mean by that? What exactly is context? Right, the price on your screen right now, say 24,224 in the Nifty, or that 51,782 in your bank Nifty, that price is here because of a few things okay which have happened in the recent past to the left of the screen, all this over here. Right, so you cannot okay have a market okay which is come down to 24,217 right now without anything being done in the past. Right, now how far do you go back into the past? Okay, you cannot go back 10 years and say okay I want to know okay what is going to happen in the next 10 years, because I'm not holding my Nifty futures position for the next 10 years. Right, so let's say okay I am just looking to see what the market is going to do okay between now and the close, which is at 3:30 p.m. So what do? I look at what the market is done in the immediate past. And for us, okay, the immediate past is always okay the last 10 bars or the last one session, which is the last 375 minutes, right? So to understand that, what we need to do is we draw up okay on this market profile chart, right? And we'll come back okay to the order flow here. But for us, okay, to understand what the market is doing today, we have to understand what it did yesterday. And all that is happening today is relative, and I use the word relative carefully over here. All that is happening today is relative to what happened yesterday, right? So this is the market today. This was the market yesterday. Yesterday, okay, was the 7th of November, 7/11. So first, to come back into today, I have to have a very clear understanding about what happened yesterday. And yesterday in market profile was a B-shaped profile. And I spoke about this on my Twitter also earlier. B-shaped profile tells you that there are no longs in the market. The previous demand all extinguished, got over, and some of them went short, and now you can say that the market is with sellers over here. For how long? Only for today. Why? Because we are looking at what happened yesterday. I'm not looking at the last 10 years which are bullish. All right, so based on the last 10 years being bullish, you can safely say that the next 10 years are bullish. Or based on the last 1 year being bullish, you can say that the next 1 year is bullish. But based on what has happened in October, October was dominated by sellers. You can safely say that November is still dominated by sellers. Am I right in understanding that? Right. So what is important over here is context to what is happening. You can go any day, number of days in the past, and form a view based on your trading time frame. If you are a 2-year-old trader holding certain instrument or anything you want, something like your SBI which just gave results, and if you're an SBI investor for the next 2 years, don't look at a 1-day chart. Look at what has happened 1 month back, look at what has happened 1 year back, look at those monthly time frame charts, because your time frame of hold is that long. But if you are looking just to trade between, let's say, a Friday and a Thursday, you need not go into a 1-year chart, right? You need not even understand what has happened last month. You are just focused on what the market has been doing in the past 1 week, and then you have a very clear idea about what it is. And because now we are looking at a daily time frame, we are looking at what the market has done yesterday. So I come into this day knowing that the seller is in control, and what I'm looking for now is evidence of more supply in the market. And where do I get this evidence? I get this evidence in the order flow chart right here. And all I'll be looking for in the order flow chart today is evidence of more supply, is evidence of more people coming into the market, right? So the early morning we had a drop right here in the A period, the first 30 minutes of the day, and the market shot up. It looked like it is going to get some covering, and then it came back, and we identified this sharp movement early in the morning. There was definite cover as the market went lower. A lot of greens covered previous shots, all of them right here. So we saw all the supply coming out. They were booking all those previous shots of yesterday, and the market sparked a rise, and it rose as high as 24,384. It could have gone a little bit more higher to 24,440. That was my personal observation as it was happening. But then there was previous supply from yesterday, which was right there at that zone of 24,390 right here. This was all that was happening yesterday. So this was an IS bar which came in yesterday, and all this previous supply was still acting in the market. No doubt some of it closed yesterday, but all this supply was acting out in the market. That forced the market to go lower in the B period, which is that period between 9:45 and 10:30, right? So this is context. I knew that there was a seller earlier, and then we were looking for this market to drop in, and since then 10:45 we've seen a lot of reds coming back into this market. Right now, is this guy doing a good job still? This is just latent supply. There are no more fresh IS signals or initiative selling candles in the day today to tell us that this market is now wanting to go further down. So what I'm basically seeing in the Nifty futures is a market which is being dominated by what we call local players. And what do I mean by that? These are players who have got a small position in the market, right? So this is a small initiative selling bar which is coming over here, 24,283, followed by 24,260 over here. This is in the 30-minute time frame. So now what I'm looking for is this IS low, 24,223. And I'm looking for evidence of more supply below this 24,223, which is the IS bar low. Am I seeing that supply right now? No, there's a lot of demand which is coming in right now, and this tells me that there isn't a lot of supply which is adding up. So it goes by what I've been saying that this is not a market which is dominated by strong sellers like yesterday. So that's why it's just been lethargic, going up and down around this zone out over here, right? So my focus today has been the work which is happening in the bank Nifty. And if you look at what is happening in the Nifty, and you look at what is happening in the bank Nifty, the bank Nifty has got those big traders. right? So this guy, okay, had come in earlier around 11:45. We just spoke about him. This is a big guy. And there have been, okay, some other guys, okay, who have come in over here, 600 lots and all. Okay, whenever, okay, you see these big guys, that's our focus. We want to work, okay, with them. We want to see, okay, what these big guys are doing and how, okay, they are trading the market. Because, okay, whenever, okay, you see a large lot trader, we call it an LLT. Whenever, okay, he shows up in a trade and you trade alongside him, with him, your conviction in that trade is that much more bigger, right? So I switched down, okay, now, okay, through a 3-minute chart, a smaller version, because all I'm interested to know now is what this market is gonna do between now and close, right? And what I see right here is that same, okay, 52,120, which I just pointed out earlier as supply, and you know it is supply because again in this 3-minute chart also you're seeing these zeros right here at 52,120. Against that, okay, you're seeing a 500 lot seller, right? So you wait over here, you wait for this bar to close. This is what we call a responsive selling pattern and RS. Now you wait, okay, for this next bar, okay, to come, and you see immediately, okay, that this is initiative seller. Now what is this initiative seller? Initiative seller is nothing but a series of market orders coming in, moving fast, and this forces, okay, price, okay, to drop. Whenever you see an IS bar, you'll always see, okay, that the market, okay, has moved down faster. So whenever you see this IS bar in a 3-minute time frame, which is this time frame right here, what you do is you focus on the low of the IS bar. You focus on the low of the IS bar and you take a position below the low of the IS bar, which is 52,029. Add a filter of about 10 or 15 points if you will, and you put a stop loss, okay, roughly, okay, around this 52,082. Now for me, this 52,082 is got 26 lots of sellers, but I got a bigger 501 lot seller right here. So my stop loss is going to be this 500 lot seller because he's a stronger guy, 52,116. Right? So it's just a question of adding about 30 more points, but my security in the trade is a little bit more because I know that this 500 guy is much more stronger, okay, than this 26,014, which is the top of this IS bar. But in an ideal situation, if this number, okay, was about 200 lots, 300 lots, 400 lots, my stop loss, okay, would have been the high of the IS bar at 52,082. Right? But I'm trying to qualify my trade. I'm going, okay, with my understanding of real-time data. I'm going, okay, by what I understand in the market. And I know that this 500 lot seller is a big guy. Okay, because, okay, once he's come in, okay, there isn't an opposite 500 lot number anywhere on the demand side. So far, you can say, okay, that he's got the biggest stick in the room, right? There's a saying in our markets, might is right. Might is right, okay, and it's not a good saying, and it's not a fair thing, okay, to somebody, okay, who's very new in the business. But this is the world of trading today, right? The institutions, the people, okay, with the big funds, the big finances, they control the market, and they are the ones, okay, who are making money in the market, right? So either you fight them or you join with them, join with them, trade with them, okay. And for me, okay, it was actually, okay, a no-brainer. When I was looking at my, okay, progress in derivatives market, it was actually a no-brainer. I had to join the people, okay, with the big money. I had to join people, okay, with the big guns, right? I'll rather, okay, put my trade with a 500 lot seller than somebody, okay, who trades 2 lots at a time, because might is right in this business, right? So that 500 lot seller is come. He's broken, okay, below VWAP. And again, okay, you're not seeing a lot of demand come back, and he's pushed this market, okay, back, okay, to that previous 51,740, right? Now, as it was approaching 51,740, I wanted to see evidence of more supply right here. This was that 51,740 zone. I wanted to see evidence of more supply, but what I'm seeing right now is 244 on the buy side. Is this good to help me go into a short trade? No, it's not good at all. I wanted to see actually another 500 lot seller over here, right here on the supply side, which is the left side. The green font is all your demand, right? And that is a simple math, okay, when it comes, okay, to the world of trading, when it comes to the world of derivatives trading. Demand and supply drive everything. Demand is the buy side of the market, supply is the sell side of the market, and there's nothing else to the market except demand and supply. And as a follow-up of that, If demand is higher, price will go up, and if supply is higher, price will go down, right? Now demand is always represented on the right side, and supply is on the left side, right? But it's not as simple as saying that demand and supply needs to be matched at all times. In fact, there is a lot of layering which needs to be understood to understand the world of demand and supply. If it was that easy to understand, 95% of traders would have made money. But what really happens is, in the world of demands and supply, there is a lot of subsets which keep happening, right? So somebody closes an existing demand position, you can see that the demand has reduced in the bar, and somebody closes an existing short position, you can see that supply is reduced in the bar, right? But it all adds up to the same thing, that demand and supply move markets, right? So for example, let's say there is about 100 lot of buying and 100 lots of selling to the left side of this current bar. So the market traded all day, and we are in this current bar, and you can say now on the left hand side, as a sum of all this, there is about 100 lots buys and 100 lots sells. Now if 10 more buyers come in and add 10 more lots, demand goes from 100 to 110, supply stays at 100, and you can say more demand is added into instruments, so price is floated up, right? On the other hand, if it was 100 and 100 of those previous sellers, 60 of them closed, supply side reduced to 40, 100 minus 60, demand side stayed at 40, but because supply reduced, you can say price again will go up. Why? Because there's been a reduction of supply. So try to understand what is happening in the world of demand and supply. This is the complexity which we have to tackle. At what stage more demand is coming into the market, and at what stage more supply is coming into the market. So the best way to tackle this is not to look at every single number on screen, but to focus on where the big money is trading, and they will tell you about what can happen next in the market, right? So this is where it is right now, as the market is moving back to VWAP. This is the bank nifty I'm still with. You can say that at the touch of VWAP, the green line over here is my VWAP, and you can say now, looking at this touch test of VWAP at 51,924, you can look at that 51,924 and say that there is no demand at this VWAP. Am I right in saying that? Because what I'm seeing on my chart, I'm seeing 0, 85, 0, 0, 0 at the top 5 rows of 51,924 and right below. And against that, what I'm seeing 136, 205, 120, 115. And I can safely say now, on this test of VWAP, there is no demand. So if I was wanting to buy above VWAP, I will not buy here. Why? Because the market is not showing me any demand over here. If this changes, and this is a dynamic market, this is a picture at 245 as of right now, the market is still open. If this changes, the market goes back above VWAP and I see demand coming up, yes, I'm a buyer, right? But on current evidence, as the screen is unfolding, I don't have confidence to be a buyer over here. This is the plain and honest understanding of the order flow right now. So if I was positioned to buy this market, I would not do it right now. What I do is, I keep an order flow chart of the option open. So it's at 51,600. I'll go with 51,800 put right here, and let's just put this as a PPR of 3, right? So this is now the same thing as that bank nifty futures. In fact, let me put bank nifty on the right hand side right here, right? So I told you that at that test of VWAP, there was no demand happening. I'm putting a 51,800 PE on my left hand side, right? And what I'm seeing in my PE is a responsive buying pattern right here and a right here. And this tells me that this can go further up to about 490. It's at about 430 right now, And if I keep a stop loss below this responsive buying, which is also the VWAP over here, this can push down. This is coming, by the way, back to that test of 51,740, and will set up that momentum trade which we are looking for. The chances of it happening is a little bit on the lower side because the volume is diminishing. But yeah, it's a Friday and anything can happen on a Friday, right? So we'll just stay open, right? So it was at 51,924. It's now at 51,845. The problem over here is a lot of people would have gone buying over here, thinking that this market was going up. It's a green bar, but hey, the green bar does not have demand. So why will the market go up, right? It's a common sense understanding of the market behavior, and this is the reason. Just because looking at the green bar people buy, they end up making mistakes. And this was not a trade at all, especially at VWAP. In fact, the short trade is working out more better over here with the lower risk. It's at 51,830. I feel this is going down another 100 points and going back to 51,740 because I'm not seeing any demand stack up as this market is testing this VWAP zone. So let's let this flow over here. We'll see how this trade pans out over here. But the understanding over here is to make a read on demand and supply, is to make a read on numbers and try to see which one is moving the market and how the market is moving in this direction, right? So on our charts, you will not find any indicators. You will not find any kind of other indication on what price can do next, because we are not fixated on only price. So what we believe is the market is a function of three things: price, volume, and time. And all three of them, when they come together, all three of them, price, volume, and time, when they come together, we have a opportunity to trade with the right information in the market, right? So let's just look at this 51,870 right now. 59 is where the cut is, very marginally short number, but again you're not seeing any demand above that VWAP. And now you can say this market is between 51,740 and 51,940, and it's trading out into a zone over here. Trading out into a zone over here. So just draw up that Nifty futures also. We just saw that a while earlier. The opposite is happening in the Nifty. So we saw that IS bar, initiative seller, and right after this initiative seller, I just remarked to you that there wasn't a lot of more supply coming in. All these guys were on the green side. Demand caught was green, so there was no case of going short below this 24,223 and work up on this trade, because the market did not show any supply over here. So we have gone back to this ISR, and this supply is here. This is what is being tested right now. But we'll still wait for 24,223 to break with more supply in the Nifty for us to look at another short trade out over here, right? So what we're doing is we are working with the power of information, and we are taking the guesswork out. What kind of information are we looking at? We're looking at information via demand and supply, and there's nothing else to the market besides demand and supply, right? And you're fixated on points, you're focused on points where demand and supply change, right? Now this is a moving market. At any point in time it has to tick because the exchange is open, right? But we don't want to do anything with this 27 and this 13 and this 22. What I'm looking for is the big guys, and if they come stacked in a row, that's the time I'm looking to take trades. What I'm also looking for amidst all these bars is I'm looking for evidence of a continuation via IS bars and IB bars. So when I see initiative buyers, I am looking to buy into the market, and when I'm seeing initiative sellers, I'm looking to sell into this market, right? So let's watch this. It's still slowing down. Volume has reduced, so we are down to only about 213 contracts. So that is why price moves have become slower. In this entire probe up from 51,800 to about 51,924, which happened at 252, the contracts traded was 2152. Contrast that with what has happened since 425, 1/4 of that, half of the previous bar, and now again we are half of that. That is why price movement is stalled. right? We'll wait, okay, for some more volume to come in. It's approaching 3 p.m. and around 3 p.m, okay, you always, okay, expect, okay, some volume, okay, to add up. I'll just take a minute, okay, to answer, okay, some questions, okay, if you have. So one question, okay, which is coming over here. By Suresh. Manoj, sorry, I'll take the other question. How the market goes down or up if there is no opposite party in this example, which is explained right now. When there is big seller, there is no buyer, then how the order gets fulfilled? All right, it's a good question, okay, Suresh. So what we are looking for in the market is just a small section of the market. Okay, this does not describe, okay, the full ecosystem of the market, right? So you are looking at a bank nifty chart, okay, but the world of derivative trading is a function of what happens in the cash market, is a function of what happens in the options market, is a function of what happens in the futures market, and all of them, okay, when they come together, okay, they form the market ecosystem, okay, which we know about right now. Right. Now, our belief system is that the big money is always in the futures market. In fact, okay, the retail market, okay, does not trade actively at all. And the big traders, okay, who would trade, okay, with size, with positions, are there in the futures market. So we have to see, okay, what is happening in the futures market. But not every time the derivative market is going to control the entire price action. There's a time, okay, the cash market takes over. Okay, and we've seen a lot of evidence, okay, of that, okay, through this year. But yesterday, okay, I spoke, okay, on Twitter, okay, about the pin effect, and that was, okay, that 24,200 CEPE controlling price action, right? A lot of people, okay, what they do is like, okay, they fixate, okay, on one side of the market. You know, they only look at FII role in the derivatives market, or they look at only, okay, what the retail is doing in the cash market. But I feel, okay, that what we have to do is, you know, look at the whole picture, not just be, you know, fixated, okay, with one small part of the market. The market is a huge ecosystem, and beyond, okay, our equity market, there is a function, okay, which comes in from the currency markets. There is a function, okay, which comes in from the bond markets, and there is a function, okay, which comes, okay, from a lot of other things, okay, the commodities section influencing our market. Not to mention, okay, news-based behavior such as the Trump election, okay, which we created. Of course, okay, those positions have to be created. So try to have a holistic approach of everything. Okay, don't be narrowed, okay, to a small view that, okay, this is happening in my 3-minute chart, and this could be the reason, okay, why price is moving up. Also remember that what happens, okay, in a 3-minute chart is not reflective of what has happened in the past 30 days or what has happened all through the year. So those positions of traders are still being held by the market. So somebody who's an institution who brought in January 2024 is not covering up everything, okay, in this 254 bar for it to reflect all that is happening in the market, right? So just have a broader view of the entire ecosystem. Don't be narrow-minded when it comes to understanding the world of markets, right? Any other questions, guys? Okay, please feel free, okay, to ask me. We are just waiting, okay, on the market, okay, to show some volume over here, and once that volume comes in, okay, we will still have a look. So what is the market doing again over here? It's probing back into this green line is again my VWAP, and as it is gone back again, you can see the 001 is here again, 6755. Not a lot of volume, but again tells you, okay, that the demand side is not there, right? So if I had a short position open, okay, I would keep it open because I'm not seeing evidence, okay, of demand, okay, coming into this market. Conversely, if you wanted to buy, there is nothing in this particular last 15-20 minute period to tell you that you need to be a buyer. And if you're buying, you're trading against this big money, and your chances of going wrong are higher when you start trading against big money, right? Let's look at the Nifty future. This is our 1000 lot seller. This is 24,259. We've just gone back and tested. There is no demand, okay, added, but we need to see evidence of supply below 24,223. So this is a very flat market right here, and I don't want to do anything, okay, with this instrument right now. As a directional player, I'm not looking to do anything okay with the Nifty futures over here, because there's nothing to suggest okay something is happening out over here, right? So this is it, guys. A quick overview about where we are, and I'll just try to wrap it up because we are going into Friday close over here. So today we've basically probed up in that 9:45 to 10:15, and we've left what we call a responsive buying tail over here. There is an initiative buying initiative tail yesterday and a B-shaped profile. We've got confirmation that the buyer is not interested over here, and this is another market which is a normal day. We call this a normal day market. And what has also happened is, through the day, the structure which we spoke about as being a weak structure has been repaired. So we are seeing a fill up of volume happening out over here, right? And the same thing is happening in the Bank Nifty. So we spoke about this earlier also. In fact, I was live. I was speaking to our people in the VMR, and we spoke about a repair of this weak structure or this weak profile, and that is happening today via this value which is building up. This is the Bank Nifty. So similar kind of a structure into next week. You'll have to go with the weekly profile. And this is the entire weekly profile. So we are still going sideways, and on from the looks of it, we may be headed for another week of sideways move in the Bank Nifty for the upcoming week, right? The Nifty weekly profiles. So that repair of structure is happening, and we could be headed again for another sideways week up next. So the major news triggers are already out in both the Nifty and the Bank Nifty, and we could have a sideways week playing for itself out in the coming week, right? We'll do a more detailed study of this. And we'll have something up on our blog to talk to you about what we are expecting in the week which is coming up, right? A quick heads up, we are still do our Diwali promotion, and we have a 30% off on all our Diwali plans for a 6-month period and a 1-year period. Up on screen, this is charts.vtrender.com, the order flow and the market profile charts. This is valid till the 10th of November. We have this 30% off on the 6 months and the annual plan. We'll recommend that you go with the Elite plan, which is the order flow. The top one over here includes stocks, but if you want only indices, it is this 47119. And if you go for the annual one, it comes with a 30% off. This is information which is needed today to tackle the new world of derivative trading in 2024. And I'll be honest with you, the markets have become faster, they have become sleeker, and big money is into it big time, very, very big time. I have personal relations with a lot of hedge funds who are trading, and after this shift from weekly, a lot of money is going to come into the Nifty futures, the Nifty weeklies, and a lot of big money is going to take itself away from the Fin Nifty and the mid cap and are going to position themselves into the Nifty. So it's going to be exciting days to trade up ahead. My personal opinion is the Nifty futures are going to be driven more by institutions, and you got to, as a trader, have a chart open which is going to track that position for you, which is going to track that movement for you, right? So always be on the side of the big money, always be on the side of the money which moves market. Might is right in the market, and if you see stronger hands, always assume that they have done their homework. Assume, because that's what I believe. They will not put big money to work without a strategy, without a plan in place, right? So every time you see them on your chart, you are that much more confident that you have a very good trade setup coming your way. And if you can spot them, you would be making the major, you'll be getting a major advantage in tackling moves of the market, right? I'll leave it over here. It's been a quite afternoon of trade, and we basically spoken to you about what demand and supply can do, and these are all live ticking charts. Okay, this is information relayed directly from the exchanges to you. And yeah, if you want that you want to do something about how we go with it, first and foremost I'll recommend that you keep these charts and come for these regular sessions which we have, where we'll talk to you about how much of an edge you can create for yourselves. Beyond that, you can also think in terms of upscaling yourself via the plans which we have for you at VTrender. You have an option of either going in for this e-course, which is a quick 5-hour tutorial on market profile order flow, designed to give you an insight into how institutions trade the market. This is not about indicators. This is about real market action as institutions see it. So we'll talk about market structure, we'll talk about market nuances, and we'll talk about the world of market profile and order flow in this e-course. So there are 12 videos, and these videos are there to talk to you about how you should be approaching the markets in the morning, how you should be approaching the markets in the afternoon, how you should be approaching the markets at the close, and what do you need to do when you approach a session the next day. And if you're looking for support during market hours, if you're looking to work with traders who trade on market profile and order flow, then we have the VMR for you, where our support to you is live in a market hours via both audio sessions as well as text chat, and we talk to you about how this wonderful world of order flow works in a live market environment. So there's nothing post dated over here. There is nothing in terms of post market facts or anything. Everything is live market in VMR, and we see the order flow live. We talk about what is happening live, and we take positions based on what is happening live, right? So just a quick look back again at that bank nifty. Right, so I told you it was making a beeline to 51,740, and it was at 51,924 when I was pointing that supply out to you. We're almost there with about 25 minutes of session. So this is the evidence of data, and I could tell you in a live market this fact because I could see this data on screen, and I could see as this market was testing VWAP that there was nothing to suggest that you wanted to go long over here. Right. So what we are saying is, guys, take care of your capitals. Don't waste your capital on guesswork. Work with data, work with real information. Protect whatever you have, whether you trade 2 lots, whether you trade 200 lots, work with the power of information, work with the power of data. So that's 51,760 here. That big guy is at about 51,740, but looks quite over here. I'm not seeing anything in the next 15-20 minutes which is going to be suggestive of the market running momentum on one side, right? So I'll leave it over here. Thank you all for coming in. Thank you for listening to this. If you have any questions, feel free to reach out to us either on Twitter. You can check with Uttam, my colleague. He's done this session yesterday. Check up our YouTube channel. We have a lot of tutorials about how the world of order flow works and how you can use it to create an edge for yourself, right? I'll sign off over here. I wish you all a wonderful weekend, and let's see you back on stream on Monday. Thank you for coming in.